Good morning. Well, I'm back in Colorado. Feels good to be back. A little bit of snow, but not too bad. Getting back in the swing of things. I hope you're having a good morning. I wanted to talk a little bit about some of the things that are on my desk today. There's a lot of talk in the news about the stimulus checks right now. Stimulus checks are coming, and it's amazing because a lot of these stimulus checks are going to be developed or sent out to people electronically. And it made me think about the whole electronic currency movement, cryptocurrencies, Bitcoin, the Federal Reserve likely to have their own cryptocurrency, and the fact that the government can track pretty much all of our money pretty much. You think about the Federal Reserve System, they can see everything there. They can see we have 1099s, all our income is reported. Uh, they know our retirement account contributions, and they have all our bank account numbers. That's why they can actually send us checks directly. Now, I personally probably will not get a check, but I know a lot of people will. Their $1,400 checks. Now, there's like 3 rounds, as I understand it, of checks. And one of the things that's interesting is that these checks, since they're coming electronically, a lot of people are just expecting them. After they've gotten a couple, now what people are starting to realize is that a lot of people aren't going to get it. In fact, I saw a social media post where there was pictures of people that were shocked. It's like, wait, I'm not going to get another check. So I guess there's a good thing that's happening in that the government is uh, at least means testing these a little bit more. So not everybody is going to get it, but that is going to shock some people because, for example, if you're single and you make $80,000, you're not going to get a check. And so what's amazing about that when you start thinking about it is, first of all, they know our incomes, right? They have all this stuff is electronic. They know our income. They know, at least what was filed, and they know our bank account number, so they can just put money in there. So if they know everything that we have, and they're requiring, even with the cryptocurrencies, you're required to have 1099s, and there's reporting and more regulations. And if all the currency is going to be basically electronic, we don't carry cash as much, credit cards, etc. So as long as the government is not corrupt, there's no problem. It's actually really easy. But what happens when we do get some kind of problem corruption wise? Well, I mean, what are they going to do knowing and having access to all the wealth in the country? I don't know if that's healthy. I was thinking about that. Is that really healthy? Let me know what you think. Some people think it's a reason to have other assets that are real, that are either outside the United States or that are in other that are hard, like gold, for example. But anyhow, so that's something that's been on my desk. The other thing I noticed, the Fed chair, Jerome Powell, he actually came out and he said, "Hey, the economy is getting stronger," which we all really know. We came off a low, so the percentages look big when you come off a low. So many economists are projecting like 6.5% growth, and a lot of economists, though, are pointing out that the unemployment rate is still way, way below what it used to be. And a lot of people are just dropping out of the workforce. We've seen that for a long time now. There's more and more people just dropping out of the workforce that are actually could be working. And this is very common when the more government intervention that you have. And if you look at economies across the world, you look at Europe, for example, they have their base case unemployment rate is higher than our unemployment rate. The more the government supports, the less incentive there is to work. So there is less work, and the productivity, which is the output per person, goes down. And we're starting to see that increasing more and more in the United States. And I think that will continue. So that puts more pressure on companies because it's harder for them to employ people. So that we're already seeing the signs that we're headed there, and we're heading there at a very rapid pace. And it's not shocking. But one of the things that struck me is that in his remarks, he has prepared remarks. I was talking about Jerome Powell, the Fed chair. He said, we're going to be here to support the economy as long as it takes. So I started thinking about supporting the economy. Like, at what point is the Fed, or how much can the Fed actually support an economy? There's a lot they can do. They can lower interest rates. They can put more money in the banks. They can encourage lending. But the real support ends at some point. The real spurring of the economy doesn't come from the money supply or the interest rate. It comes from real productivity from human beings in factories, in technology, in services, in healthcare, innovation. So the Fed can only do so much. So now what's happening is the Treasury is stepping in and they're just directly putting money in the system for people to support the economy. But it's really a false support because what's happening is the money supply grows, the value of that currency is less and less, and we can buy less. So it's basically a hidden tax that is being put on us. All right. So speaking of taxes, I was looking at the changes in the tax rates this year, which is interesting. The IRS um, basically, the way the taxes work, and I know a lot of people know this, but it's shocking to some people to know that Trump basically put in a lowering of the tax rates in the brackets, and virtually all the tax brackets were lowered except for the lowest, which stayed at 10%, which was already pretty low. So that is sunset. That is supposed to actually expire in 2025. But of course, the administration could change that at any time, right? So we could see changes in taxes. But for this year, the tax rates are roughly the same so far, but there is some change for inflation. So I noticed that there's a little change allowed for inflation. Well, if inflation rises, that means tax rates rise. You can't do that too long. But a lot of people have gotten whacked because when Trump changed the rates, even though he moved the rates down, basically the other thing that was taken away was the standard deduction was changed, right? So a lot of people went standard deduction. Some people wound up paying more taxes. I started thinking about the states. We have a lot of clients that are moving. People are moving. And there are 7 states out there: Alaska, Florida, Nevada, Texas, South Dakota, Washington, Wyoming. They don't have any state tax at all. And a lot of those states are getting a lot of people are moving there, especially like Florida and Texas. So other states also, like Colorado, is kind of nice because Colorado has a flat tax. It doesn't scale up if you make more money. So we pay close to 5% in taxes. So we kind of have this bifurcation. People are trying to avoid taxes, and we just came back from from California, and we noticed a difference. California is such a great state. I love California. You're kind of swimming an uphill a battle there for loving California versus the environment. As far as a business climate, environment, and taxation. But so that's one of the things that's been on my mind is the taxes and how that's going to affect people this year and the stimulus checks. And the other thing is mortgage rates. Mortgage rates have been moving up pretty fast lately. I was looking at the rates. Let's see, the 30-year average is at 3.40. The 15 years at 2.63 and 2.55. That is still extremely low. So, I mean, that's basically a good thing. And so people, if you're looking at real estate, you're looking at doing some things in real estate. I think that's a solid time. Now is a good time to look at it. And I think real estate prices probably continue to move up, especially as we continue to stimulate the economy. We are seeing the economy come back, but the stock market is stalled. The stock market, that confuses people because I was at the pool with somebody, and they were they were telling me, what's going on here. I mean, the economy looks really good. Everything is starting to get better, and the stock market just kind of went stalled. And that's pretty normal because the stock market will anticipate a move, things getting better, and then it will kind of digest for a while. So we're in a period right now where I think it's kind of the show me the money period where we need to actually see real continued strength, because right now we're kind of on a sugar high again, and we've been getting addicted to sugar. I think we're diabetic now. We're officially diabetic because we keep getting these sugar injections as an economy. And what we need to do is go on a keto plan. We need to cut the carbs out and start getting healthy again, and we can do it. And that's my hope of what could happen. So I don't know what you guys think. What do you guys think? Do you think this economy is on a sugar high, or do you think this is real? I think we have some real things going on, and as we look at the stocks, there's certain companies that are innovative, disruptive, making new products and services that are great. So I'm pretty optimistic as long as you stay in those areas. So anyhow, those are some things around my desk today. I hope you guys are having a great day. I'm going to go and get my day started and try to dig underneath a pile of mail. All right. Talk to you guys later.